Today in Accra, the global financial markets are right in your pocket. With a smartphone and a decent connection, you can tap into trillions of dollars moving across the Forex markets in milliseconds. But that instant access creates a dangerous illusion. When you sign up and deposit your Ghanaian cedis, it's easy to assume the local government agencies that oversee your bank are also watching your back online. They aren't. Trading currencies online is perfectly legal for individuals in Ghana, but the local authorities have no rules on the books to regulate the digital brokers offering you these accounts. You are operating in a complete regulatory gray area. If an online platform freezes your funds or manipulates a trade, neither of Ghana's major financial watchdogs will step in to retrieve your money. To survive in this space, you have to act as your own regulator. You need to know exactly where the local laws stop and how to protect your own capital. This map shows two institutional pillars. The SEC polices traditional capital markets, vetting stocks and bonds, but actively excludes digital retail forex. On the other side, the Bank of Ghana steers macroeconomic policy, stabilizes the cedi, and watches commercial banks. They license the physical forex bureaus you see on the street, but they do not monitor offshore digital platforms offering 100-to-1 leverage to individual traders. What's left between them is a massive void. Nobody in Ghana licenses the brokers providing your charts and executing your trades. With no state agency vetting these companies, the entire burden of due diligence falls on you. To trade, you have to wire your money to an offshore broker, and the moment you try to send investment capital across national borders, you hit the Bank of Ghana's capital controls. Converting your cedis into dollars for an overseas investment account triggers heavy scrutiny from local banks, whose job is to prevent unchecked currency from draining out of the country. To get your money through safely, you have to use officially recognized channels. Direct bank wires, major credit cards, or fully traceable digital e-wallets like Skrill are generally processed without issue. But there is a strict anti-money laundering rule that trips up many new traders. The name on your bank account must identically match the name on your offshore trading account. Even a slight variation will result in a rejected transfer. Sticking to these traceable methods and keeping your documentation perfectly aligned, this is the single only reliable way to keep local banks from freezing your deposits when the market is moving. So your money is successfully out of the country. Without local oversight, how do you ensure the broker doesn't just steal it? You have to borrow international protection. You do that by exclusively opening accounts with brokers governed by stringent foreign watchdogs. A prime example is the UK's Financial Conduct Authority, which has some of the strictest financial enforcement rules on the planet. Another rigorous shield against fraud is Australia's ASIC. These aren't rubber stamp agencies. They actively audit brokers and issue massive fines for misconduct. This diagram shows the most vital protection these licenses enforce: mandatory segregated accounts. Your deposit never mixes with the broker's own operational cash. If the company goes bankrupt, your money is locked away securely and returned to you. Shady, unlicensed brokers operating out of lightly regulated island nations won't offer this. Instead, they lure targets in with promises of guaranteed daily profits and aggressive account managers calling to demand larger deposits. Taking 5 minutes to search a top-tier regulator's official database and verifying your broker's license number is your single best defense against losing everything. While your actual trades execute in a regulatory vacuum, the money you bring back home certainly does not. Any profit you pull from the global markets into your local bank account is visible to the Ghana Revenue Authority. General income tax laws still apply to your overseas investment earnings. Africa's digital finance landscape is maturing quickly. It is highly probable that the SEC and Bank of Ghana will eventually draft explicit guidelines to pull retail forex into the official financial system. Until that happens, it is entirely up to you to demand transparency. Before committing serious capital, test your broker's withdrawal process, scrutinize their spread fees, and ensure their trading platforms execute without lag. You can absolutely trade safely from Ghana right now. But doing so means acknowledging the gray area, relying on top-tier international standards, and treating your money with uncompromising discipline.